I think we're going to see more clear regulation. We're going to see enforcement move from going after legal crypto businesses, right, to going after bad actors or continuing to go after bad actors. And I'm pretty excited about the possibility of what can happen as we sort of build and also go after like truly bad guys in the same moment.
I'm Karin Yuklea. Welcome to the FIDSA Intelligence Network. I'm here today with Ari Redbord. Ari, can you tell us a little bit about yourself?
Yes. First of all, thank you so much for having me. I've been really, really looking forward to this conversation. I'm Ari Redbord. I'm the global head of policy at TRM Labs. We're a blockchain intelligence company, and I'm sure we will dig into all of that in a moment, but essentially means that we work with law enforcement and regulators globally, as well as private sector compliance teams, to stop illicit actors from engaging with the cryptocurrency ecosystem. I spent about 11 years as a federal prosecutor at the U.S. Department of Justice. I'm really always working at that intersection between national security and money laundering, what I call threat finance, basically stopping bad guys from getting the money they needed to do bad things, terrorist financing, sanctions evasion, export control. I then spent about 2 years at the U.S. Treasury Department working in the office that oversees the national security apparatus there. So FinCEN, which is the financial intelligence unit for the United States, OFAC, which is the sanctions regulator, a team called TFFC, which is sort of the policy shop, and OIA, which was an intelligence component. Really, again, on that same mission to keep the financial system safe, which I now get to do at TRM Labs.
So, you kind of said keep the financial system safe and, stop the bad guys. And I have to tell you that I worked in AML for a long time and mostly around traditional banking. And when crypto started taking off, the reaction I had and the reaction I feel like most AML professionals had is that crypto is designed for crime, to facilitate financial crime. So kind of wondering how you see that as an expert in that area in terms of, is that the case and how do we handle that?
Yeah, no, it's really interesting. I get asked all the time, like, sort of, what's your crypto origin story? And I think people expect me to say, well, I invested in Bitcoin in 2012 and now drive a Lambo or something. But it's very much the opposite of that. And that is, I was part of a team in 2015, 2016 that was investigating North Korea money laundering cases. And we were looking at counterfeit cigarettes and we were looking at counterfeit $100 bills. And North Korea was doing anything to raise funds because it had no economy still to this day. It was the early days of them starting to use Bitcoin to launder funds. Today, they've been attacking the cryptocurrency ecosystem and stealing billions of dollars. But this was before that. And we can get into that. But really, my interest in the technology grew from investigating those types of cases and really being fascinated with the ability to move funds on a blockchain, on a public ledger. And really from those days on, I've understood that the promise of cryptocurrency is cross-border value transfer at the speed of the internet, right? We can now move funds faster and at larger amounts than ever before for humanitarian aid, for remittances, for payments at scale, right? We could use stable coins now to send funds cross-border faster than ever before. But who else likes to move funds faster and in larger amounts than ever before, right? Bad actors, illicit actors, cyber criminals, and sanctions evaders, and terrorist financiers. But the difference between crypto and sort of the world that you and I both come from, right, the traditional financial compliance world, is that crypto lives and moves on blockchains, which are open ledgers, which allows us with tools like TRM to track and trace those funds, to have more visibility on those transactions than we ever had before. And that's kind of the paradox, right? Bad actors can now move funds faster and in larger amounts. They can ask for bigger ransom payments, right, and get them. But we can now use tools, law enforcement, investigators, compliance professionals can use tools to track and trace those funds in real time. And that's kind of where the rubber meets the road. That's the kind of interesting paradox when it comes to crypto compliance.
So how is crypto compliance different from traditional compliance?
You'll hear different answers to that. I actually think they're really similar. And I think essentially what you're always trying to do is ensure that whether it's illicit actors or fraud or consumer protection issues aren't taking advantage of your customers, aren't engaging with your platforms. And crypto is just sort of a new way that we now have to monitor. So, TRM, we're part of a compliance stack, the same way that so many traditional tools are part of a compliance stack. But we are just monitoring activity on blockchains. We do transaction monitoring, right? But it involves blockchain transactions as opposed to sort of traditional fiat transactions. We are helping compliance professionals understand typologies of money laundering, but on blockchains. We're helping them identify patterns of illicit activity, right? These are all things you do as a compliance officer at a bank, but we're now helping to do it on blockchains rather than on sort of more traditional payment rails. And I think, and a lot of the patterns that you see are very similar to what you would see in the traditional world. Like, for example, when I was a prosecutor, I used to prosecute cases involving structuring, right? This idea of like taking out smaller amounts in order to not hit the legal threshold for a reporting requirement and then go to another ATM or another bank, etc. On the blockchain, we call that a peeling chain. It's a pattern of consolidation and dispersion. You're sending a large amount of funds and peeling off a smaller amount of funds along the way to break up those transactions. So when I talk to compliance professionals, I'm always just like, hey, don't be afraid of this thing. It's just the same thing you've always done. It's just a slightly different type of technology in terms of the payment rails that you're monitoring.
I do think there's a lot of just fear and like difficult to understand how to work with it. And it's an interesting thing to say. It is just structuring under a different name with a slight variation.
It is and technology changes. And, I think one thing that I've definitely learned is that bad actors are always early adopters of transformative technology. So essentially, they say that the only uses for the internet were, child pornography and pirating music. And the reality is, look, it's transformed information. I think it's really the same thing with crypto, right? We see bad actors trying to take advantage of this, but really at the end of the day, it's going to be used at scale for payments and other types of activity. And I think we're on our way there.
So I would say you just said that the bad actors are always early adopters of new technology, and I think that's true. I also always think that the late adopters are often the regulators that catch on to things happening years and years after they started happening. And I think we all saw that with crypto, where it was the Wild West for a few years, where crypto exchanges and other organizations was pretty much unregulated and unscrutinized. And then suddenly the hammer came down on anti-money laundering and some regulation. Where do you think that stands now? And I guess where do you think that stands in light of the administration and their desire to reduce regulation?
It's interesting. People talk about the Wild West and cryptocurrency. And I think in the lack of legal clarity, the lack of regulation, and I think mostly what those people are talking about in the United States, at least, is this question about like, are these securities? Are they commodities? Are they something else? Who should regulate? Is it the SEC? Is it the CFTC? And this world that we're in is the only world it might not matter, right? If you're a cryptocurrency business operating in the United States, if you're a centralized exchange, if you're a broker, if you're a custodian, if you're an ATM company, you are a money service business and you are regulated by FinCEN, the Financial Intelligence Unit in the U.S. Treasury Department. And that means you have the same obligations that other financial institutions have. You have to have policies and procedures. You have to have compliance officers. You use tools like TRM. You have to respond to law enforcement subpoena. So yes, there is this question out there about like legal clarity and the need for it. And I think that's what's coming in this new administration. We're already seeing more movement for stablecoin regulation that will put in guardrails from a stability standpoint, but also from a security standpoint around stablecoin issuers. We're going to see a market structure bill that actually does say, is it the CFTC? Is it the SEC? Who's going to regulate this? But I think our area, which is kind of like something I've always clung to, is like one of the areas that like it's actually pretty clear. You have to have compliance controls in place today if you're a cryptocurrency business operating in the United States. Where it gets a little dicey is in jurisdictions that haven't implemented the FATF standards or the Financial Action Task Force standards, or outside of the United States or Europe where there are controls today. There's a whole illicit finance ecosystem in Russia. Many Russia-based cryptocurrency exchanges have been sanctioned by OFAC, by the European Union, by the UK. But we're seeing that the sort of illicit underbelly of the crypto ecosystem targeted by regulators. So you have that sort of whole piece. Now, what are we going to see sort of in this Trump administration? There is this narrative that like, hey, we're going to move away from regulating and it's going to essentially be, as you said, the Wild West. I think what we're going to see is less focus on lawful cryptocurrency businesses like Coinbase and Uniswap and Binance and others. And I think we're going to see a continued focus on going after bad actors. So Chinese money laundering networks, cartels that are using cryptocurrency to move funds. So I say all that to say I think we're going to see more clear regulation. We're going to see enforcement move from going after legal crypto businesses, right, to going after bad actors or continuing to go after bad actors. And I'm pretty excited about the possibility of what can happen as we sort of build and also go after like truly bad guys in the same moment.
I'm optimistic about the potential for a shift in the way regulations are applied that maybe it won't be so much about less regulating and maybe regulating in a more effective way. I'd like to be optimistic about that being the direction.
We can be optimistic together. I'm a very optimistic guy, and but I also am realistic, and I think that but I do think if you see what's happening at the SEC right now, if you see what's happening at the CFTC right now, Treasury, DOJ, it's not that they're getting rid of the teams that are looking at these things. They're more aligning to their core mission, which is to weed out fraud in the securities market, in the commodities market, etc.
I am wondering, so there is, not on crypto specifically, but there's this new proposed rule by FinCEN and the OCC to move towards a more true risk-based approach and a more effective approach. And I actually think this rule aligns with the idea of, not regulation for its own sake, but for actually achieving objectives. But I do wonder if it's going to get frozen until 10 other regulations gets canceled or something like that.
Yeah, so you have that certainly. And that's where you just have to be smart, right? I'm hopeful. I will say that having spent a long time in the U.S. federal government, that there are true subject matter experts at the SEC, at the CFTC, at the U.S. Treasury Department, at DOJ. And I am hopeful that the political appointees that come into these roles now will look to those people for guidance. I know that question seems like an open one, but I am hopeful that happens because people bring true subject matter expertise. And hey, should we have less regulation? Certainly. Should we have less government bloat? Like, of course. We just have to make sure we're picking the right places to cut, and that's very much like TBD. But I'm hopeful that from illicit finance, anti-money laundering, crypto focus in particular, that we have the right people in there to sort of make the right calls.
I am also hoping somewhat that maybe less regulatory pressure in a way on financial institutions will open the door for them to be more innovative in terms of technology. Because if you let the issue for a lot of banks, at least in AML, is always like there's never a budget or resources or time for optimizing and transforming because they're always busy meeting the requirements, dealing with the latest regulatory exam, dealing with the latest enforcement. So I'm sort of hoping that if the pressure reduces, maybe it will actually be the time that more financial institutions can transform their operations.
I like that a lot. I think it's really smart. I think it's a great way to look at it. I think that technology is also a forcing function. Nothing has ever moved as fast as technology is moving right now in my lifetime, certainly. And maybe every generation says that, but I think this AI moment in particular, we're not talking about things in weeks or months. We're talking about things in days and how rapid innovation is happening. I look at these tools that I use now every day in my job at TRM. We're leveraging AI in almost every aspect of our business. And we're also seeing criminals use it at scale. So I think financial institutions are going to have to use technology in order to meet this moment. And, the more I talk to folks at financial institutions, particularly those that are getting into crypto, and there are a lot more these days than ever before, they're all trying to figure out how to deal with this sort of like just a rapid innovation that's going on. And I mean, it's all I think about is how can we leverage this technology to stop those that are also leveraging, pretty transformative technology.
I think, besides all these movies about AI attacking us, it is early days, but yet, of course, the bad actors are the first ones to figure out how to use innovation. And especially in AML, I think it's hard to innovate quickly because it's not just a matter of the technology being ready. It's a matter of feeling safe. Compliance
Yeah,
officers feeling
feeling
safe to do something different.
feeling safe, and it's a very conservative group. I was at a conference for BSA AML officers from different financial institutions, plus the Department of Justice, plus IRS criminal investigation, and it was a great gathering. And I got up there and I was talking about very much, actually, very much like the conversation you and I are having. And I said, look, every one of you should be using AI today to streamline your processes and procedures, because I will tell you that people who are trying to get on your platforms are using it. And there was a chief compliance officer next to me, and they were just like, it's easy for you to say that because you work at a startup, right? Like we have to make sure that we are compliant with regulation, that we are sort of, and it was a very fair point. But the reality is, these are the most highly regulated institutions on earth, essentially, right? Banks, U.S. banks, and it will take some time for them to get there.
I think this is true. I would say that like a few years ago, I was working in consulting firm that we advised some crypto exchanges on their AML policies. And to be honest, it was very clear that at that time, their policies and their systems and their procedures and everything was very below the standard of the rest of the financial services industry. Now, that was probably the beginning of the shift because they realized it wasn't good enough and they were getting pressure, and that's why they brought us in to help them figure out what they actually needed to do. But I would say at the time they thought they had compliance processes, but they did not have compliance processes to the standards we expected to see. I think it is different. I mean, I think that was a few years ago, and since then everybody has kind of had to catch up.
And it goes. It's interesting. I mean, you've seen the space develop, grow very much. You've seen more use. You've seen fintechs like PayPal and Robinhood and Stripe and Cash App and others engage in the space. You've seen traditional financial institutions, and I think that with that you bring sort of a compliance mindset. I also think we've seen a lot of enforcement from places like U.S. Treasury, and those enforcement actions send a message to the broader ecosystem about the importance of compliance. People ask me all the time, what should I read to get smart on this stuff? And I always say, like, pretty much FinCEN enforcement actions are a pretty good place to start because it tells you exactly what not to do and exactly what they expect you to do. And oftentimes guidance will come like a year later after an enforcement action. And enforcement actions are a really good place to start. So if folks are listening and you want to know what not to do to go sideways with your regulator, enforcement actions are like a really good place to start, from OFAC, from FinCEN, really across the board. And to this administration's credit, we've actually gotten pretty quickly a sense of what those national security, law enforcement, money laundering type priorities are, to include a real focus on cartels, right? On day one of the Trump administration, they put out an executive order that made cartels foreign terrorist organizations, which allows all kinds of interesting national security and law enforcement authorities to kick in. We saw a real focus on fentanyl from very early, a real focus on China. My experience is all road leads to China when you're talking about money laundering networks, and anyone who's stealing money is using Chinese laundering networks to launder it at this point in the world. North Korea, cartels, fentanyl dealers. So we started to get a sense of like where the border obviously is a very huge one. But these are all AML issues, right? It's how do you stop funds from moving across the border, bulk cash smuggling, and networks of shell companies and cryptocurrency. Same with cartels, same with Chinese money laundering networks. So, I think we just sort of figure out, hey, these are the priorities, and how can we best support those priorities?
So what are the Chinese money laundering networks? How do they get that money into the U.S. or?
Yeah, it's a really good question. One of the things that they're often used for is to try to get around the threshold to send money overseas from China. And that's one of the things these networks are often used for. But that's a great question. Yeah, I mean, there's networks of money mules and other individuals that they're engaging to try to take out funds, to try to send funds, to try to go receive funds. There's really all kinds of, and look, even in the age of the internet, where funds can move online at unprecedented speed, oftentimes, networks, particularly Chinese money laundering networks, are using real life people to move cash, to move different items, trade based money laundering, networks of casinos, right? It could easily have been sort of trying to get that person to be a cog in that sort of money laundering wheel. I don't know, but I will say that like whether they're being scammed into that or just sort of broader scam networks, that's definitely obviously a huge focus for TRM and for law enforcement these days, and I don't see that going away. But again, like another connection to Chinese organized crime, right? You see these pig butchering cases, these romance scams. It is often Chinese money laundering networks, organized crime that is being brought in to launder those proceeds, and it's absolutely critical that we stop the supply side on that side of things, but also the demand side from U.S. and Western victims in these cases, and that's an education piece, but something we also spend a lot of time working on. The FBI has just stood up a program called Level Up, where they're trying to get out there and reach victims before they're victims of scam, potentially to reach banks. Something that we're really focused on at TRM is how do we stop a legitimate transaction from a bank, right? Because all of these transactions are legitimate. It's the customer who owns the account going to the bank and telling them to send money. It's very hard to identify that, right? Because you have a scammer, romantic situation, whatever it is, asking a victim to go send money from their account. It's a legal transaction. We're thinking about all these things. It's building the technology for this moment, but scams and fraud and that type of activity is a huge focus for us.
Well, part of the question is what do you do even if you flag it and the victim refuses? Because we're trying to warn the person that they're probably getting scammed. They don't want to hear it.
It's really hard.
They don't want to believe it.
It's really, really hard. And you see people go through the stages of grief on this thing and ultimately, eventually sort of come to the realization, but most of the time it's too late. What the FBI is doing in Level Up, which is really fascinating, just in the age of technology and the internet, they're actually knocking on people's doors. They're going door to door and we're saying, hey, we believe that you may be the victim of a scam based on our information. And they're trying to have that conversation in person, right? I mean, there's nothing like the FBI knocking on your door to have a wake-up call, maybe. But I think they're trying to address the actual problem.
But if they called me on the phone, I'd probably think someone's scamming me.
Exactly. Yeah, I said the same thing when I heard about this. Exactly the same thing.
It's very interesting that to combat some of this very new technology that's being used to scam people, we have to resort to showing up in real life and knocking on the door because no one believes anything otherwise anymore.
Yeah. We were talking about this TRM talks on deepfakes, and one of the things I brought up was this idea of like North Korean IT workers. One of the ways we stop them is we make any interviewee come on their camera. People are just listening to this, but we could both see each other right now, and you look pretty legit. I think I look pretty legit, maybe a little bald, but like otherwise, pretty good. And but that's not true, right? Like you can fake being on camera. You can use a AI deep fake on camera, which allows North Korean IT workers and others to to do things now that they can't. I'm hearing HR professionals recommend in-person interviews. Like I thought those days were over, right? And that's kind of like, so that's like to your point about the way we stop these things is going back to sort of these old school methods. I'm not sure how scalable or but it's really a wild moment.
All right, I think this was a great discussion, and I'm might have to meet in real life sometime to make sure that we're real.
I would absolutely love that. And thank you so much for having me.
Thank you so much for being here.